The 2024 financial markets are off to the races already. We've seen fresh economic data come through. We are in the middle of US earnings season, and we're seeing the build up to one of the biggest global election years in history. It's quite a start, and there's quite a lot to process. I'm joined today by fund manager Dean, who will help break down what we saw in markets in January. And Dean, if you had to sum it up into three categories, what would they be?
Thanks, Nicole. I think three categories. Okay, the first one is that all eyes continue to be centered on inflation. Equity markets, the US, Europe, and Japan have all had a strong start to 2024. And I think thirdly, certainly, and you mentioned, the political landscape has given investors plenty to think about.
Okay. So if we start with inflation and interest rates, it's been a tough couple of years, but over the past couple of months or past few months, we've seen some cooling, which has caused central banks to pause their rate hikes. With this fresh economic data that's come through in January, what does it show us and how have central banks responded?
Every month sees us pour over lots of fresh economic data. Presently, and as we've mentioned lots on these videos, inflation data is front and center. Figures released for December for the US came in at 3.9% and the UK at 4%. So we're still some way above the central bank's targets of around 2%, but it's moving in the right direction. Most major central banks paused interest rate hikes in Q4 of last year, as inflation had indeed begun to come down, and the cumulative impact of interest rates were beginning to make themselves felt in the data. Canada, the Bank of Japan, and the European Central Bank all held interest rates steady this month. At the time of recording, the Fed hasn't yet announced its decision, but is expected to hold fire. Market pricing tells you that we might see interest rate cuts in the second half of this year.
Okay, so tying that speculation around rate cuts to your second point on equities, there is optimism out there. We have seen a strong start to Japanese, European, and US equities in January, and the S&P 500 in fact hit an all-time high this month. And so far, the reports from US earnings season seem pretty strong. Is there cause for optimism or is it too good to be true?
So I think the strong performance from US equity markets this year reflects a couple of things. It's a belief that the economy is going to slow but not slump. Inflation will continue to normalize, so the Fed can cut interest rates and ease some of that pressure, and corporate earnings can happily chug along through the course of the balance of this year, particularly in places like the tech sector, which have had this sort of thematic sweet spot around artificial intelligence. Earnings season is underway, with around 159 companies having reported so far, and on average, companies have beat earnings expectations by around 7%, which is pretty good. Across the Pacific, Japanese equities have also performed strongly this year. The Nikkei is another index that's reached an all-time high, this one the first in 3 decades. The story here is largely down to the return of inflation to the economy, structural reform in the Japanese corporate sector, and the cheaper yen, which boosts the earnings of international companies when translated back to yen.
So optimism in equity markets now, but as you said, there is a lot going on globally this year with elections being held in 64 countries. How are we seeing markets react to the uncertainty around this year's elections?
Yeah, so nearly half the world's population will head to polls in 2024, which is just a massive number of people to try and think about. The first election on the watch list was Taiwan, where the DPP won out. And while significant for the world in terms of Taiwan, China, US relations, assuming that China sees limited evidence of a push for outright independence within Taiwan might keep markets fairly becalmed. There's no shortage of coverage and speculation around the other big elections coming this year, including the US, the UK, and India, to name a few. And time will tell as to whether or not there's going to be a markets angle to developments there.
Okay, so a positive start to the year in spite of some mounting uncertainty over election results, and it sounds like all eyes will be on the central banks and interest rate expectations. As you know, we like to end the monthly roundup with a stat of the month. And our stat for January is that just 3 companies, Nvidia, Meta, and Microsoft, made up over 50% of the S&P 500 return so far in 2024. So thank you, Dean. Thank you all for watching, and join us again next week for another topic that's caught our eye.